Hello and welcome everyone to Gold Asset of the Day for the 6th of October 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we head into a new quarter here, what do you need to be aware of? Well, first of all, in the last week, we have seen a 5% reduction in the net long position of gold from hedge funds and money managers, which brings the overall total to 57%. So of those hedge funds who do have a position on gold right now, 57% are long. This was very much demonstrated last week, where gold prices broke down to multi-week lows, retesting that 1,720 US dollar per ounce zone. In fact, we utilized that sell-off with the end of quarter profit taking to build a position on gold, getting in at 1,727 US dollars per ounce, right at the end of a quarter where you typically get these outflows in anticipation for fresh capital to come in at the beginning of a new quarter on Friday, the 1st of October. That's exactly what happened. Gold prices, they broke out over 1% to the upside. We had a 3-day impulse move. This enabled us to quickly bank 310 points profit on our gold position. So of course, for every one lot contract that you'd be trading, that's $3,100 of profit. For every 10 lot contract that you'll be trading, that's $31,000 of profit. Now, as we go into a new week, we have seen, again, pressure to the downside as we've headed into this 1 week of national holidays in China for Golden Week. And with that, we've definitely seen less liquidity during the Asia Pacific session. That has resulted in pressure on gold, silver and platinum. Each night during the Asia Pacific session, we're seeing them under pressure. I would expect that to continue right the way through to Thursday. Then, of course, China will be back from their public holidays, and that's where we also have Friday's non-farm payroll data as well. Lots of these cycles are very simple for you to capitalize on. We discussed it with you previously. We expected the dollar index to perform very well over the month of September. It broke out to 1-year highs. We banked last week over 900 points profit over 6 trades on our US dollar index position. So again, for every one lot contract that you'll be trading, that's $9,000 of profit. For every 10 lot contract that you'll be trading, that's $90,000 of profit. We subsequently banked that trade, bought into gold at the lows here, and now we're seeing gold have a decent bid over the last few days. But again, over the course of this week, during the Asia Pacific session, expect that usual weakness to come in. Typically, the pullbacks that we see during this week for gold, silver and platinum can be utilized as great buying opportunities to take advantage of the usual play here over the month of October. I'll put one other major date on your diary as well. That's going into next week on Monday. It's a public holiday in the USA. And again, expect the same. So during thinner liquidity, this is often where you do see more exaggerated moves in the market. Often we're actually seeing that follow through to Tuesday. So ultimately, with public holidays that we've got in Asia at the moment, the USA next week, this creates some really good opportunities to buy in on the dips to capitalize on the strength that you typically get later on throughout the month of October. And of course, this is where you want to be utilizing data, statistics, understanding of daily, weekly, monthly, quarterly cycles in the market. You've seen a lot of that play out with ourselves over the last week here. End of quarter profit taking last week, the dollar accelerating to 1-year highs, giving you a great opportunity to buy in low on the metals last week. We've had a 3-day impulse move to the upside. Again, range bound price action during this week. Weakness during the Asia Pacific session. A lot of this comes down to understanding capital flows in the market. Alongside that, you want to be utilizing market intelligence, understanding the daily, weekly, monthly, quarterly cycles for each commodity. Alongside that, understand macroeconomics, fundamentals in the market. Alongside that, learn and understand the intermarket correlations, the ratios in the market. Marry that up to with sentiment, and of course, understand how the hedge funds, money managers, banks and institutions are positioned. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to join our professional mentorship program.